This content is for educational purposes only and is not financial advice. Any results shown are illustrative, not a promise or guarantee of similar outcomes, and individual results vary. Options trading involves high risk of loss.
Hello, in today's video we're taking a look at the Tuesday, July 7, 2026 trading session for the SPX CBOE index. We're utilizing all three indicators from the day Trading GPS SPX Suite. The daily key levels V3.0 indicator, our Ribbon V3.0 multi-reset indicator, and then also our special VWAP that's for SPX as well as the mini index XSP. Okay, so right off the bat, today has been a fairly volatile session given the fact that today's session's market structure was inside yesterday's range. Normally with that particular market structure, you don't get a very volatile session. However, in today's session, we have two things in the news. We have the global chips sell-off in Micron, MU, and other chip stocks. And then later on in the session, we did get news breaking about the U.S. revoking the Iran oil sanctions waiver after the latest tanker attacks. So you never know in the current environment what kind of news is going to come out regarding Iran and the whole situation. So you always have to be on guard for breaking news because of that situation still lingering. Okay, so to start off, I just want to explain why we have a VWAP indicator as part of our suite. You'll see here that we have the two native VWAPs that are built into Tradingview. VWAP, volume weighted average price, and then also VWAP auto anchored. And you'll see that they have red exclamation points. And what that means is no volume data. So it's not a Tradingview platform issue. It's simply because the global indices feed from SPX CBOE does not include volume data for SPX or the mini index, the XSP. So that's just the situation with the data feed with Tradingview with CBOE. CBOE, SPX, and XSP are, of course, the official SPX index and mini index. So with Tradingview, native VWAPs fail, but our VWAP has a built-in external institutional data source for SPX, and it also works on XSP. So you're able to have the VWAP on your direct chart by using our VWAP that is included with the SPX suite. Okay, so in today's session, as you can see, we have a split screen here. The reason we have the split screen is we want to show off utilizing the Ribbon V3.0 indicator. Now this Ribbon V3.0 indicator is an EMA ribbon that is a multi-reset edition that has resets for stocks, ETFs, futures, Forex, as well as any global market. Now when you're using an EMA ribbon for something that trades 24/7, even though it does have sessions like cryptocurrency, trades 24/7. So a standard EMA ribbon works fine for something that trades 24/7 like cryptocurrencies. However, with indexes such as SPX, XSP, NDX, which is the NASDAQ index, and other US indexes, they do not trade in the pre-market or the overnight directly for those symbols. So there's always going to be a gap situation at the open. Other symbols such as stocks have a 4 a.m. Eastern pre-market open, which there's typically a gap on a lot of stocks from the previous evening session close at 8 p.m. Eastern. And also with futures, you have a 6 p.m. global, Globex open, in which there is an hour-long gap between the 5 p.m. Eastern close and the 6 p.m. open. Also, Forex on Sunday evenings, you have the 5 p.m. open, which is the 5 p.m. Eastern open, which is the open from the Friday or previous Friday close. And Forex does not trade over the weekend. So there are many situations where you can have gaps. Even for sessions that don't have gaps, there are particular sessions, like with futures, the London session, the 9:30 a.m. RTH open. Same thing with stocks, 9:30 a.m. Open. Forex has its own session opens. And then you also have any global markets. So if you trade stocks or indexes in other markets outside the US, like you trade the FTSE or the DAX in Europe, or you trade stocks on European markets, or say stocks or indexes on India markets, or any global market outside the United States, there's going to be sessions as well with their own gap situations. So the Day Trading GPS Ribbon V3.0 indicator is a multi-reset edition that covers all of those particular situations and also offers up to 4 custom resets that the user can define. So in today's particular SPX session, we're looking at a split screen. On the left side, you have the session reset filter on for SPX and other indexes, and on the right side, you have that reset filter off, which would be your standard common EMA ribbon with the filter off. So the advantage of this ribbon, especially using it with the key levels indicator, is that on closes above or closes below any of the daily key levels or the 5 contextual levels, that is your initial entry signal. However, there is no entry without confirmation from the ribbon. So our ribbon allows you to either look at it on a dual screen like this. So if you have only a single monitor, you can do a dual screen look like this. If you have multiple monitors, of course, you could just have one chart on one monitor with the filter on and one with the reset filter off. However, it gives you the flexibility that you can look at the market with both. So you can look at it with the reset filter on and the reset filter off. So you can either choose which one you prefer to go with. You can obviously view both, or if you want to be more conservative, you could wait until both of the ribbons align and provide the same confirmation signal if you prefer that sort of a more conservative approach. So in the 9:30 a.m. opening candle, you can see we got a very large opening candle here in the 9:30 open. So that's going to be this particular candle here, which we'll go ahead and mark off. So as you can see here, here's the opening candle. Same thing over here. We'll go ahead and mark this one off. 9:30 a.m. opening candle, green, closes above the bull bear key price level. On the standard ribbon, however, you can see that it is an all red ribbon. So that negates that close above. So that would not be a bullish entry because it's negated by that. And it's also negated with the filter on, because you can see here the all red ribbon here. So we can go ahead and zoom in on this, just so we can see it more clearly. And we'll go ahead and zoom more in on this one too. So as you can see here on the second candle, or even the next candle after that, you have a close below this yellow line here, which is the bull bear key price level. It's kind of out of the picture now as far as the line label, but that is the bull bear key price level. So this is giving you your bearish close below. So your opening candle was negated, so there's no trade. However, you do have the all red ribbon here, as well as obviously the all red ribbon here. And you have the lower bands of the ribbon pulling away, especially on the reset one. It's already pulling away on the standard one because you have this hangover effect from the earlier close on the previous day's session. So as you can see here, by being able to use both, you can use a conservative approach if that is your preference, waiting for both ribbons to give you the confirmation, or you can simply choose whichever one you prefer to use in practice, either using it with the filter on and going with that, or using it with the filter off, whichever works better for your style of trading. However, the advantage again is that you can see it both ways if you want to have a dual screen or have them on multi monitors. And you can also use the more conservative approach if you also want to go with double confirmation. And as you can see here, we did get a move down. This blue line here is the R1 level. We'll go ahead and put the levels back in now that we've gotten through zooming in on that. Okay, so as you can see here, we did get a move down, slicing through the PML, going to S1, which is your regular scalp trade. There is no micro-scalp opportunity here, although if you did enter on this 9:32 a.m. candle, the micro-scalp opportunity, if you chose to take that, would be the PML level. The micro-scalp is a contextual level, one of these 5 levels, that happens to occur enough away from your entry, but still before the regular scalp one level move in your favor. So a one level move in your favor on this trade, since it's a bearish trade from the BB-KPL, is going to be S1. So this one still qualifies. It normally would be nicer if it was closer to S1, but still before the S1. As you can see, there's no other contextual level in play for that particular purpose. Then you have the mid S1, S2 level, which is your 1.5 level move on a regular trade. And then finally, the 2 level ideal move is the S2 level. So at either one of those particular targets, micro-scalp, regular trade, minimum 1.5 level move, or regular trade 2 level ideal move, that is when you would either exit 100% of your trade or do an adjustment to either moving your stop loss to break even or break even plus an additional profit buffer. Or if trading multiple contracts at any one of those 4 waypoints, micro-scalp, regular scalp, 1.5 level move for regular day trade, or 2 level move for a regular day trade, which is the ideal minimum move. Your third option is scaling out and exiting 60 to 90% of your original position when it hits whichever of those targets that you've initially chosen. Micro-scalp, regular scalp, 1.5 level move, regular day trade, minimum threshold, or the 2 level move, minimum ideal move for a regular trade. Securing 60 to 90% of the profits in the original position by exiting 60 to 90% of your original position at one of those 4 waypoints. And then on the remaining position, either 10 to 40%, depending on whether you closed out 60 up to 90%. Then you are adjusting your stop loss to break even, the price you paid for the option, so that's your executed price that you paid, or adding an additional profit on top of break even. And then the idea is that if you're doing that method, then as price continues to move in your favor to additional key levels, what are those key levels? Are main key levels, midpoints, or contextual key levels that happen to occur after your initial waypoint target is met. Then you can either close out some or all of your remaining runner positions, or further adjust your stop loss in your favor by adding on additional profit buffer, and then do the same thing as it happens to continue to trend in your favor using the ribbon as your guide in that effect. So as you can see here, we did bottom out at a 2-level ideal move, and then we began the reversal move. The reversal move here finally moved back above the VWAP, then closing above S1, giving you an S1 bullish trade opportunity. However, in this particular case, the only bullish move was up to a micro-scalp to the PML level again, which occurs before the 1-level minimum move for a regular scalp, which in this case for a bullish trade off of S1 is the bull bear key price level. It is 1 full level above S1. Later on in the session, we did get the news about the oil tanker situation in Iran being revoked. The U.S. revoked the Iran oil sanctions waiver after the recent tanker attacks that was occurring just right around just before 3 p.m. So as you can see here, as soon as that news came out, we started breaking down again. And you can see the transition in the ribbon here. And then here you have the close below S1. Now, a close below S1, your minimum threshold move here, as far as a regular scalp would be S2. We did not quite reach that. And your micro-scalp move on that is going to be the YDL level, a contextual level that occurs before a 1-level move in your favor. Obviously here we're getting at around 3 p.m. So usually anything after 2 p.m. as far as any entries, then you want to switch to our late session lotto option strategy, which we go over in another video. The link to that video is in the description of this video. That video also goes into much more detail about the indicators, all the different key levels, how the indicators work, and some other aspects about the indicators, which we are not going to go into in today's session. Especially the SPX daily key levels indicator, it's packed with a lot of different features, which we haven't gone into at all in today's video. So when you look at the description of this video, you'll see a new features video for SPX daily key levels V3.0, which goes over a lot of the new features that were added in the V3.0 version of this indicator. And then again, you'll see the longer session video, which also goes into the full daily key levels trading strategy, the early session lotto options trading strategy, as well as the late session lotto options trading strategy. Now, just for people wanting to know what were the original stop loss levels for this SPX bull bear KPL bearish trade to begin with, as explained in our other videos on main key levels are the bull bear key price level, the R1 through R6 levels, and the S1 through S6 levels. So if you see here, we have R1 through R6 and S1 through S6. However, it's better to zoom out by clicking on the right price axis, holding it down, and zooming out to say R2 down to S2 or R3 down to S3. And that is because in 80 to 85% of sessions in a normal year in a normal volatility environment, 80 to 85% of SPX sessions are going to have an extension as far as their range, 2 full key levels above the bull bear KPL and 2 full levels below. So that's going to be your general range that you're going to see in 80 to 85% of SPX sessions. A 2-level extension above or below. That's why the 2-level move is the minimum ideal move for that, and the 1.5 level move is the minimum threshold move for a regular day trade. A 2-level move, just for clarification, 2-level move above and below the bull bear KPL, but that also includes, for example, a move from S2 bullish move back to the bull bear KPL, or a bearish move of R2 down to the bull bear KPL, or a bearish move of R1 down to S1, or conversely, a bullish move of S1 up to R1. The general range, the point is that the general range, 80-85% of the sessions, is going to be contained within R2 to S2. That doesn't mean that it's going to test both of them. It just simply means that usually most of the sessions result in an extension away of 2 levels at the most, above or below. But there are sessions where it will test both. But the general point, again, contained within R2 down to S2. Your remaining 15 to 20% of your sessions in a normal year in a normal trading environment, normal volatility environment, the majority of those remaining 15 to 20% sessions will struggle to see R1 through S1 as the general range, and in some cases on very choppy, lower volatility, lower VIX days, struggle to even get outside the midpoints above and below the bull bear KPL. In the minority of those 15 to 20% sessions, you will see sessions that will extend beyond R3 to R6 or S3 to S6. But those would be the minority of the remaining 15 to 20%. Also, just to bring up another way of using this ribbon indicator, and that is going to be using the VIX. Now, as you can see here, we're on the VIX on a 15-second chart. So we're going to just put, for a moment, we're going to do a split screen here just to show as an example. We're going to go ahead and mark off 9:30. We'll go ahead and move this over for right now. It's a little hard to do on this particular 15-second chart. But you get the general idea. The main thing we're just trying to look at here is confirmation with the VIX. So we'll just leave it there for right now. Excuse me. Okay, so as you can see here, you can also use the ribbon with the VIX. When I'm on a 2-minute chart, I like to have a 15. You could also use a 30-second. I mean, you could also use a 1-minute or 2-minute, but I prefer to see the VIX when I'm using it in conjunction with this on, say, a 15-second chart with the ribbon, because it can give you an early warning sign on the 15-second. That's kind of the purpose of running it on the 15-second. So we have the same ribbon on here. So the purpose of using the VIX is kind of an additional confirmation. It can sort of give you an early warning too sometimes of some moves with it. So as you can see here, if we go back and you see this down move here, we get the spike in the VIX starting right after the opening candle here. We get a little flip-flop, but then we get this move up here. And then we're getting the red move down here coinciding with this reversal here. And then end of day, we're getting this weakness here, which was the prelude right before the announcement came out of the White House about the Iran oil revocation of their ability to have that oil waiver. So obviously some insiders here getting in. Right here you have 2:40 p.m. and beyond. So you're getting in here. You see this spike up here, 2:40, and then we get this move down here, coinciding with the blast off in the VIX here, on the ribbon turning green and going up. And then lastly, you've got this little move here, coming off the lows here. VIX moving back down after settling back down around YDL. So you get a move almost back down to S2, back up to YDL. So the point is using the ribbon indicator with the VIX. Again, all of this is a lot easier if you have multiple monitors. So it just really depends on what kind of monitor setup you have. Some people have a single monitor, but they have a very wide, maybe they've got an LG or one of these 50, 60 inch single monitors, which acts like multiple monitors. It's just all one. Sometimes they're curved, sometimes they're just larger monitors. So some people have that set up, and they can just have different segments set up on that single monitor. So it really just depends on what kind of setup you have. The more information that you can get without being too confusing. So I like to leave it to the ribbon VWAP daily key levels V3.0 as far as the SPX chart, and then also having the VIX chart using the ribbon and having it on a lower time frame than I'm using on SPX. So in this case with a 2-minute, I'm going with the 15 seconds. So sometimes, you know, you'll get the whiplash effect because of the 15 seconds. So, but you're also going to get earlier notice of some significant shifts by using the 15-second as well on the VIX. So that can give you kind of a early warning sign of a pending down move on the VIX shooting up and giving that all green ribbon, or a reversal move like here, where you're getting after this big green ribbon, we're now getting the reversal coinciding with this as well. So it can give you some additional confirmation. Some people don't need that. They can just go off the ribbon and VWAP here along with the daily key levels. But for those looking for additional confirmation, that's a suggestion I have, is using the ribbon indicator with the VIX, and then using it on the VIX on a lower chart time frame than whatever you're using for SPX. Okay, so just going back to our earlier point here about the entry stop losses. For those of you that have already seen many of our other SPX videos, this is kind of going to be redundant because you already know this, but for those who are just seeing our videos for the first time, today is more of a condensed session. We're not going into all the details like we do in a lot of our videos. So again, please look in the description for one of the longer SPX session videos that you'll have the link to there. We go into the full strategy for both the standard daily key levels options trading strategy for trading either 0DTE or 1DTE options. That's for day trading those options within the same session. And we go over every aspect of the standard daily key levels trading strategy, as well as our early session lotto options strategy and our late session lotto options strategy. Now, as far as stop losses, with this particular indicator, when you're taking trades off of the main key levels, which again are the bull bear key price level and R1 through R6 and S1 through S6, on those particular trades, your stop losses are the QL levels and the midpoint levels. So on bearish trades, it's the QL above the level that you're basing the trade on is the tight stop loss. On bearish trades off of main key levels, the midpoint above is the standard stop loss on a bearish trade from a main key level. So for example, a bearish trade off of S1, you would simply go in and turn on, we'll go ahead and get rid of this VIX chart here. You simply just go in, as an example, on the daily key levels, you go down to the QL levels and QL above S1. And that would be your tight stop loss in a bearish trade. So if you were just getting in late, say you were doing something else earlier, getting some coffee, finishing up your breakfast, you come back, you still had a viable opportunity here on an S1 bearish trade as well. So if you got that, QL above S1, midpoint above S1 is your standard stop loss. Getting in earlier, as we described earlier on the bull bear key price level bearish trade, QL above the BB-KPL is your tight stop loss on that trade. Again, it's all based on what main key level is the trade based on. And then your midpoint above would be your standard stop loss. On a bullish trade, say off of S1, same thing in reverse. You have the QL level below S1. And you can turn all these on in advance and save them as defaults if you prefer to have them on. They're not on right out of the box by default. Only the QLs and midpoints above and below the bull bear KPL are turned on by default. But you can turn on whatever QL and midpoint levels you want, additional ones, and save them as your particular default, whatever your preference is. So on a bullish trade, you have close above S1, all green ribbon, upper bands of the all green ribbon pulling away from the base. QL below S1 is your tight stop loss, bullish trade from S1, or your midpoint below is the standard stop loss for that. If you're ever taking trades off the contextual levels, you simply go into the user control panel and you go down to that section. Stop loss and take profit levels for the 5 contextual levels. You can control your line labels here for both the stop loss and take profit that it will generate on your chart. And as an example, let's say you were taking a bearish trade off of PML, which was another viable trade today. And you simply go down to the bearish section, which follows after the bullish section. Enable bearish entry stop loss for PML. You choose standard or tight. Once you do that, it will print it on your screen with the line label for PML standard or PML tight stop loss. And then you can choose to either use the built-in take profit multiplier built in for reward risk multiplier, starting at default of 2, going up in 0.25 increments, or going below 2 in 0.25 increments, and selecting that, or simply only using the stop loss levels and simply using the other key levels as waypoints for your target exit or adjustment on the trade. So that choice is up to you. Again, there's lots of other features built into this SPX Daily Key Levels V3.0 indicator, including automated market scenario analysis that occurs at the 9:30 a.m. open. We're not going to take a look at that today. However, that is another very good feature, and that's also built into historical sessions where you can see the market structure for each session on a historical basis, and that can help you with going back and looking at historical sessions and tweaking your trade process as seeing what particular main key levels provide the best risk reward opportunities generally in a given market structure scenario. So each historical session has market structure scenario labels, which makes it easy for you to see which market structure it was on what particular day, see how the key levels reacted, both the contextual levels as well as the main key levels, and that can help you refine your trading process and your own trading system as far as helping you with determining whether you're better off doing micro-scalps, regular day trade, 1.5 level move, or 2 level moves, and then also in particular market structure scenarios, where does SPX usually find support at in those particular scenarios, and what other types of behavior and characteristics and tendencies is it exhibiting in recent historical sessions. That can also be very useful information as far as applying it to current sessions as well, when you have a current session that has the same market structure as you've been looking at in the particular historical sessions. So as an example, we'll just go ahead and take a quick look at that now just so you can see it. So for example, if you go in this indicator, you go down to the market scenario table. Show market scenario table. It is kind of large to begin with. It is on normal. You can change where you'd like it to be on your screen, and you can also change the size to make it smaller or larger. So this gives you today's market scenario. There's only 6 different market scenarios that SPX can be in. This is market scenario 1 inside yesterday's range. Gives you an explanation, tendencies, also gives you key characteristics, what to look out for. And we also, if you don't want to have this on your chart, if you have the normal tables up, for example, for purposes of this video, we put all the tables to off so we could show you that dual screen a little bit more clearly. But in this case, if you have the tables on, then as you can see here, the contextual levels table will also tell you what market scenario. So you don't necessarily have to have this on after you get used to using it and you know what market scenario 1 means after use and practice. You can also use our PDF one-page cheat sheets, which I'll show you now. You get those with your purchase of either the SPX Suite or the SPX Daily Key Levels Indicator by itself. In the user guide, there is a link to the Google Drive link to the PDF one-page cheat sheets for all 6 market scenarios. Okay, here are the PDF cheat sheets. It starts off with a one-page summary here, which is just basically your cover page. These are all in 8.5 by 14 formats. If you're going to print them out, you can download these to your computer. You can just look at them on your screen. You can also print them out. If you're going to print them out, just make sure you print them out on legal size paper, 8.5 by 14. 6 different market scenarios. Each one has a color-coded outline, giving you primary tendencies, key trading characteristics, what to expect, visual structure, and also an explanation. Also, for market structure scenarios such as gap, also gives you key level priorities depending on the size of the gap. In addition to that, since the gaps need to have that in addition to the other tendencies and key trading characteristics. Same thing with gap down, top overhang poke above. Same thing, what to expect, key trading characteristics, primary tendencies, and some of them will also have tips. This is the same information that you will see on the screen with your market scenario analysis chart. It does have, the PDF cheat sheets do have a little bit more information because there's just simply not enough room to put it here without just making it super big. Like this is normal here, just to show you the difference. We'll go ahead and let's just go ahead and put this up here. And right now we'll just go ahead and show you what the difference is. So that's on normal right now. If you go ahead and change it to say small, that's going to be what it looks like. Of course, tiny, be a lot smaller than that. Large would be obviously a lot larger. Like I said, it does have normal as the default. You can change the background and colors on here. Also, we have a complete alert section, acceptable range filter, 9:30 a.m. opening candle close BB-KPL level alert, crossed and closed above alerts, as well as crossed and closed below alerts. And a show last alert only, which basically is more of a decluttering filter for alerts if you prefer a more decluttered look instead of seeing every single alert. Like I said, there's a lot of other stuff that's built into this indicator. We're not going into all the different things. I just wanted to briefly show you that there are a lot of other built-ins with this indicator. Like I said, simply go look at either the features video, the new features video, which outlined all the new features that were added in V3.0, or just go look at one of those longer session videos. So thank you for taking the time to watch today's video. If you are interested in purchasing either the SPX Daily Key Levels Indicator by itself or our SPX Suite, which includes all three indicators, the VWAP for SPX and XSP, the Day Trading GPS V3.0 ribbon, which you can also use for other markets as well, stocks and ETFs, futures, U.S. index, U.S. equity index futures, ES, NQ, RTY, YM, etc. Other major futures, metals, energy, treasuries, currencies, etc., which have their own specific resets. Forex, for all the Forex sessions. Like we said earlier, crypto, you don't need a session reset for crypto. Even though there are crypto sessions, it does trade 24/7 with no breaks. So you just use the standard ribbon with no resets for those. And then for our international customers that trade stocks or indexes in European markets or India markets or other global markets outside the United States, you can use your own custom reset here, of which there are 4 different ones that you can use and set up. Okay, so whether you want the SPX Suite, which includes all 3 indicators, or just the SPX Daily Key Levels indicator by itself, simply send us an email at daytradinggps@gmail.com and request a discount promo code, and we will send you one that will give you a significant discount off your purchase of either the SPX Suite or just the Day Trading GPS Daily Key Levels V3.0 indicator by itself. What we'd like to do in closing out the video is to show you reviews and feedback we've received from traders who use our daily key levels indicators. You can see all of the reviews for yourself by simply going to wap.com/daytradinggps. So that's www.whopwap.com and then /daytradinggps. And then where you see the reviews, just simply click on that link and you can look at the reviews for yourself. But we're going to show you some of them now in the final part of this video. So thank you again for taking your time for watching today's video.
For those interested in seeing how other traders are using the indicators and the daily key levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. While individual results will always vary based on experience, risk management, and execution, these reviews provide insight into how traders are incorporating the daily key levels indicators into their own trading processes. You can view additional customer reviews and feedback at daytradinggps.com. Thank you.